Welcome back everyone to the Moneycontrol live stream. You are watching markets with Santo and CJ in association with M Stock by Mirae Asset. Well, we have weathered the storm, it seems, that originated on Wall Street last night. If you look at the Nifty and the Sensex, they're headed for the day's low, but the losses are quite milder if you look compared to what was happening on the Nasdaq and S&P last night. We are down by about 0.4 to 0.5% on the Nifty and the Sensex at this moment. IT power stocks are the one which are helping the benchmark indices weather the storm. On the other end, if you look at it, it's the oil and gas names actually which are the major losers at this point of time, largely led by RIL. So Santo, clearly it doesn't seem like we are probably seeing the fear factor that was quite visible on Wall Street last night. We have seems like we have weathered the storm. I mean, although we went below that March lows, we have not given our knees up.
Well, CJ, trust you to try to put a positive spin on everything.
Yeah, I mean, there is always positive.
The fact that the market is going downhill, and I think this will continue to be the trend for some more time. CJ, and I would advise you, be very careful when you're bargain hunting at any of the small or mid cap names. I think these are right now value traps just waiting to snare the newcomers into the market.
You have to have some risk. I mean, I think the sell-off right now, if you're seeing it, I think it's just because of Bajaj Auto just turning everybody's mood off by deferring that buyback at this juncture. I mean, everybody was so excited Bajaj Auto is finally going to do a buyback, and now the board comes and said they need to discuss more. I mean, what is there to discuss? Just offer a good premium and get the buyback started, man.
And if they had to discuss, then probably they shouldn't have told the market.
Absolutely, yeah.
They're considering a buyback.
Exactly. I mean, I think the company secretary somewhere botched up how much time the board will take to discuss the buyback, and you can clearly look at the stock is down about 6.5% at this point of time.
That said, CJ, still, we could still see a temporary pullback, after the Fed announcement, because
we have been down 9 sessions now out of 10, so I think we are due one.
So anyway, the market has factored in for a 75 basis point hike. So even if it comes, there's nothing out of the ordinary. If the 50 basis point hike, then probably there's all the more reason to cheer.
Can I just make one more speculation that you might feel is ludicrous?
Yes.
I think Fed is trying to play this very coolly. They have just leaked it out that they are probably going to look at a 75 basis rate hike, scared the living daylights out of the market, and probably tomorrow evening they will come out with a 50 basis point hike, and everything will be dovish again. I mean, it's a wild guess, it's a wild shot, but it could happen, right, Santo?
Possible.
Could be the trigger for that pullback.
Yeah, you can't rule out. I mean, trust policymakers to float trial balloons just to gauge the mood of the market. That said, further headwinds for the market, both from the rupee, which has been hitting new lows by the day, and by extension, the stronger dollar, because of which the government finances are likely to be wrecked further.
Well, if rupee keeps on plumbing those new lows, please, that FIS selling is never going to stop. I mean, they are anyway taking losses, and if you compound matters by depreciating rupee, it just accentuates their selling pressure. That said, I mean, there is a lot of stocks action that was there in the session today, even though the benchmark indices were largely placid. Starting off with Santo.
Zomato, I know, CJ, this is one favorite stock of yours. Now, the stock saw a good pullback about a few weeks back. It had fallen all the way to about 50 rupees, and from there it rallied quite a bit. Now it's up about 40%, roughly 40% from the lows, and it's been an outperformer in this market as well. But now it could be lacking triggers to sustain at those levels. And CJ, there's this report by Macquarie, and it has flagged the point that, for Zomato to be able to sustain this valuations, it needs to be steadily growing its monthly transacting users, and that number has not really changed. And according to Macquarie, Zomato needs to get to a number of about between 55 million to 90 million monthly transacting users by FY33, which is quite a tall ask, given that even right now, as this market is in the midst of a boom, you've not seen the monthly transacting users really grow all that much. That's one point. And also, Zomato will need to invest in Blinkit. Many brokerages are seeing that as a positive, but here, it's doing it more out of force rather than by choice, because it needs to kind of defend its market share, and that's the reason. But in the short term, this could lead to further pressure on margins, which means that the path to profitability could be longer. So clearly, more concerns for the stock rather than factors supporting it.
Well, Santo, as far as the user growth is concerned, it's a growing market, right? We have still not reached saturation in this market. It's a large market, it's a growing market. You still have a lot of urbanization to take place. So I don't think the target at Macquarie is suggesting of about 55 to 90 million monthly users by FY 2033. I think that should be easily achievable in my point of view. So I will not really worry about that. Yes, I feel that the stock has factored in the negatives that were there after the IPO. Clearly, we have seen a 40% bounce now. Even today, the stock has totally shrugged off Macquarie's concerns at this point of time. The stock is higher by 2.5%, and there is strong growth visibility. You cannot take it away from Zomato. Its earnings are, or rather its revenues are going to compound at 30% annualized basis over the next 5 to 10 years. And I feel the Blinkit acquisition itself is, it could actually end up being a master stroke in a different way. Yes, currently it will have to burn a lot of cash and invest a lot of money into that grocery business. But if Blinkit, if Zomato manages to merge Blinkit within its own app and create a Swiggy and Swiggy Instamart sort of dynamic, I feel that could be a good trigger to gain market share and defend market share in the grocery business as well as the overall food delivery business in general. I feel that could be the way to go for Zomato instead of keeping Blinkit as a separate app at this juncture. Apart from that, one thing that would be a little counterintuitive at this juncture is that HSBC is of the view that the startup funding crunch that we are seeing at this point of time, or the private market funding crunch that we are seeing at this point of time, could actually be a beneficiary for Zomato. Because
why so?
Because competition will not have capital, so they cannot compete with you that much, right? And at the same time, because Zomato has decent capital at this point of time, it's not facing any sort of funding crisis at this juncture, they can invest in their hyperlocal business and expand its scope and avenue, while the competitors at this point of time are looking to probably just survive and get by, right? So I think that is a very crucial point coming in from HSBC, and that is why I think that makes me quite bullish on Zomato at this juncture, especially given the price correction the stock has taken. Yes, it has risen by about 40% from the lows of about 50 rupees, but there is still a lot of scope to go to the 52-week high that the stock had seen.
But I thought there was only one competition, that is Swiggy. Where are the others?
No, so if you're able to raise, if somebody like Swiggy is able to raise a lot of capital, right, so then you will expect that they will be able to also expand their services very aggressively. But if Swiggy is not able to raise capital at this juncture, say in the next 1.5 years, because of reluctance of investors to at this point of time bring in too much capital in the private market, that could provide some breathing room to Zomato to probably go about this hyper-local business in a more slow and steady manner, get the profitability metrics right, get all those angles right, instead of just putting cash into the business and hoping that it will probably survive or it will be able to fight with Swiggy at this juncture. And also, there is not only Swiggy. I mean, you have others like Tata as well coming into that side of the business. You have Dunzo and all those other very instant grocery delivery apps that are out there trying to compete for Zomato space. So I think there is a lot of competition, but that competition could cool off because of the lack of capital.
One last point, CJ, but these will be applicable to Zomato also, no?
But Zomato at this point in time is in a better position cash-wise because of the IPO, right? Santo, they were able to, even when they were IPOing, they had a good cash position. And even now, in the latest con call also, the management suggests that they don't have any sort of funding issue or a need for raising capital going forward. So clearly Zomato in that sense at least is not as bogged down as maybe other startups out there who need more capital to invest in their business.
Now, once he takes a stand, he will defend it with his life. Anyway, move on to the next stock. CJ.
Well, the next stock is definitely the stock of the day, clearly Adani Enterprises. Wow, what a move on the stock, Santo. The stock soared after it announced that Total Energy is going to join its green hydrogen business. They're going to take up about 25% stake in Adani New Investments Limited. It seems like RIL is going to take on Anil, or Anil is going to take on RIL, Santo, if you get my point right. The juncture here is, or the indication from Adani is that $50 billion of investment, Santo, in 10 years in green hydrogen. That is a lot of money. I mean, I mean, that would be in rupee terms, what, 8.5 lakh crores, if I'm not wrong. So clearly a lot of enthusiasm and a lot of aggression from Adani. And I am very impressed by this, group. I mean, when they decide to go for something, they really go whole hog for it, right? We have seen that with Wholesome. We have now seen that with green energy as well. And clearly, given that green hydrogen is a high growth sector, a high growth area, clearly it will also start reflecting in the valuation, and thereby there could be a re-rating potential. Also, going by past trajectory of Adani Group, Santo, we know that they love to hive off their fast growing businesses and list them on the market to probably unlock value. So I would not probably rule out a possibility in the future when the business stands on its two feet, then they might demerge it and list it on the stock exchanges.
But I mean, in your whole enthusiasm, you seem to be overlooking a few points there. Now,
what are they?
Why is the market valuing Adani Enterprises where it is right now, right? It's an infrastructure play at the end of the day, right?
Yeah.
And you're paying 300 plus times,
Because it's really investing in businesses, high growth businesses like green hydrogen.
And after all that, the margin is still 5% over the last God knows how many years.
Yeah, of course, because those businesses are still not contributing meaningfully to the EPS, right? Once they start contributing, and that is what the market is discounting, and market discounts the future.
Market is discounting many years ahead, and I think in a lot of these stories, market will soon get some cold water of reality thrown on
If the market does not give a cold reality check right now, then when will it, Santo? If in this market you don't get a reality check, I don't think a reality check is coming the sort that you are talking about.
Well, I think the valuations are way too extravagant. They won't sustain. Look at the borrowings. It's just ballooning like anything, CJ. This is a story I would be very cautious about.
Santo, I talked about the borrowing in the morning as well when I was talking about one of his subsidiaries, Adani Green. Clearly, investors are not worried about the borrowing because they believe in the refinancing ability of Adani Green, especially of the fact that they are able to raise a lot of funds from the international market at very attractive spreads compared to what they are getting at home. So clearly, they have a plan, they have a roadmap, mapped out, and they are going.
Where are the cash flows to support that?
That will come with time, right, Santo? This is a 10-year, 20-year play that they are getting into. They cannot worry about cash flow from year one, right? You cannot worry about that.
Right. Okay, Trent is the next stock on our watch list. Now, Trent's Zudio stores have turned profitable, and according to broking houses tracking the stock, Zudio will power the next leg of growth for Trent. Also, the store ramp up across both Zudio as well as Westside has been among the highest over the last decade. And according to Antique, Trent has been able to report industry leading same store sales growth, EBITDA margin, and it also has the lowest discounting. So all these factors put together, CJ, and when you look at the fact that the company has managed to hold ground in a very volatile market, the operating margins have also been fairly steady, at about roughly 14%. So this stock is definitely something that one needs to watch closely.
Well, Santo, I have also in the past on the show have talked about few stocks from the apparel business. So I clearly understand the point of view that you're coming from. Clearly, this is also part of the reopening theme in a way. If you look at people going back to offices, they need a new wardrobe and stuff like that. So there is a lot of pent-up demand out there. My only concern right now with the apparel industry is A, on the costing side, and B, on the demand side, because we know where inflation is at this juncture, and if inflation keeps on being high as it is right now, I just fear that discretionary spending will come down going ahead, and probably investors or consumers will become more choosy about what they buy and what they spend their money on. So that would be just my only concern. Apart from that, yes, we know that cotton prices are rising, so there are concerns for garment makers when it comes to costing. So that could be possibly a little bit of a near-term headwind on the margin side. But overall, yes, I do agree that the industry dynamics do look good for Trent and for other apparel, companies out there. So yeah, not too much to say in terms of negative, but these will be my only two concerns. That said, one stock where some concerns are abating at this point of time is Dynamatic Tech. Now, this is a company which is involved in the engineering of automotive aerospace parts and whatnot. Now, the stock rose quite significantly today after it announced a new deal with a long-time client, Airbus. They are going to be manufacturing escape hatches for Airbus 220 planes going ahead. It's a long-term contract that the company has signed. Now, this clearly a deal with a company like Airbus, which has also been a long-term client for Dynamatic Tech, Santo, clearly improves the revenue visibility as well as the visibility on large orders out there for a company like Dynamatic. So that is a very important takeaway for me from the order win. And apart from that, if you look at it, from a technical point of view as well, if I was looking at it from a 12-month perspective, the technical indicators are also showing quite a bullish sign at this juncture. The near medium term, if you look at the short and longer term technical indicators, both are indicating that bullishness is on the counter. Momentum is with the stock at this juncture, and clearly this is one stock that I'll be looking into quite eagerly.
Well, CJ, I would suggest that if you already invested in the stock, use this news flow as an escape hatch to probably jump out. See.
Thank you so much. Thanks for the offer, but no thanks.
Okay, between March 2011 and 12, that's when you saw a very big jump in the company's top line. From 500 odd, it jumped to about 1500 odd. But then, since then, almost 11 years now, right? The top line has stayed in a very narrow band, and actually on a compounded rate for 10 years, 5 years, and 3 years, it's all negative. Same goes for the bottom line growth as well. Now, if you are a technology company, and this company has been around for quite some time, it's been listed for now almost more than 16 years, right? Just look at the price chart. It's not performed like any other technology company. So, what gives the confidence that this order will be able to change the fortunes of the company?
Well, Santo, I just believe that recently the management has been doing good things there, and also let's remember the aerospace and automotive are two spaces that actually are seeing good growth out there. If you look at commentary from somebody like Novelis, who also caters to the aerospace sector, clearly demand is coming back quite rapidly after the COVID-19 shock. Automotive also, we have talked about it. You yourself are quite bullish about the automotive space. So I just feel that demand environment, at least for the next 1 or 2 years, could be a good cyclical play, Dynamatic, because this is one of the cheaper plays out there in the automotive space. A lot of those stocks have gone up quite significantly over the past 6 months. So for me, just making a value play, making a small base player with a small base could give me asymmetric returns out there.
Well, in the last 10 years,
it's okay, Santo. It doesn't matter what happens in 10 years. If you keep on looking at 10 years, then you would have missed out on HUL.
Probably, if you get in there,
you would have missed out on ITC as well, this year. So, yeah, sometimes past is not a good indicator for future performance.
Well, the last stock on our watch list today is Kohinoor Foods. Now, interesting stock there, CJ. The stock has been hitting the upper end of the intraday circuit filter for almost more than a month now. This from the time when Adani Wilmar said that it has bought out the Kohinoor brand of rice from McCormick of US. Now, the arrangement is still not clear. Of course, the brands belong to Kohinoor, but the marketing was done by McCormick through a 100% subsidiary, which completely owned subsidiary by McCormick. So it's still not very clear where Kohinoor, what the arrangement with Kohinoor Foods was. Neither has the company come out with any kind of clarification on that. And if you look at the auditor's note to the FY22 results, it's a horror scene out there. They have understated their revenues to the tune of almost 100 plus crores. The bank owes a lot of money to the company owes a lot of money to banks. It's already been taken to the NCLT. Now, what the company says is that it has reached a one-time settlement with one of the leading lenders, and also that strategic investors have shown interest in the company. But if you look at the stock, the way it's been moving up, and over the last couple of days, some big volumes. Probably, I think some of the insiders could be getting out. So this is a stock one needs to be very careful about.
Santo, we love a turnaround story, don't we, in this market? And I just feel that probably the sort of movement that you're seeing in the stock at this point in time just goes to show that the market is probably sensing a turnaround in this company. Yes, they have tried to talk to lenders. They're probably reaching an agreement there. So if that plays out, if the restructuring does happen, and if they are more importantly able to get some strategic investors into the company, I feel then that could be the play that the market is getting at. And who doesn't want a share of that, at least from the short term perspective? Yes, from the longer term, clearly this is not one stock that I would want to have on my portfolio, given the concerns around its fundamentals and its business, the way it's handling its business. But in the short term, if I want to make a punt, maybe if I have extra cash lying around, I might want to take that.
Well, the market has once again rebounded from the day's lows, while it's still way off from the day's high. I think.
But we are still in the negative, yes.
We're still in the negative, but Well, CJ, just be wary of the small and mid caps, I tell you.
But it's the mid caps that are doing well, Santo, at this stage. The mid cap
There's a theory there. So when I'm speaking to people in the market, what they say is that, a lot of PMS providers, they've got exposure to, all of them have got their favorite stocks. Now, liquidity has fallen considerably down there. So if they're unable to exit, what they're trying to do is, kind of help, push the stock price a little higher so that it becomes easier later to kind of liquidate some of the positions.
You and your conspiracy theories, Santo.
Oh, my friend, I've been around for some time and seen a lot of this happen.
Sure.
Okay.
Yes. I'm sure. I'm not doubting your, your sage-like experience and everything else that comes with it. But I just feel that probably sometimes, markets overdo things, and especially in the small cap space, I think the selling has been to the magnitude of what it has been for Nifty or Nifty mid cap. I mean, even if you look at, in terms of valuation as well, the small cap index is at a 20-25% discount to the Nifty index, whereas the Nifty mid cap index is still trading about a premium to the Nifty 50. So clearly, I think the valuation cut that has happened to small caps is the same, has not been dished out to Nifty and Nifty mid cap stocks. So therefore, I would not be surprised that in fact investors are hunting for bargains in the small cap space.
Well, with that, it's a wrap on this edition.
But before we wrap up, Santo, we need to talk about what we'll be looking forward tomorrow, right?
Well, sorry about that.
Take away my 2 minutes of glory. Well, on the horizon, definitely it will be the industrial data that will come out in China tomorrow morning. That will definitely move the markets in Asia and maybe later in Europe as well. The May data is going to come out. Now, this will probably be a little affected by the lockdowns that are happening. But there was expectation that lockdowns will be removed in June this month, but that has again flopped. We now know that Shanghai is again going into a temporary lockdown for the timing. So it will be very critical to see how the industrial production data comes out of China. Apart from that, yes, the big one, the US FOMC meetings outcome will come later in the evening tomorrow. So that will be one key trigger for the market to watch out for. That there will be a lot of volatility in tomorrow's session, given how expectations are rapidly changing around what would be the quantum of the rate hike from the US Fed. So those will be the two things that I'll be watching out, Santo.
Quick bet, CJ. 50 or 75?
100.
Oh, anyway. Well, with that, it's a wrap on this edition of Market with Santo and CJ. Thank you for watching, and I hope you enjoyed watching it. Please do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and the Moneycontrol app. We'll catch you again live 9 a.m. tomorrow morning. Till then, have a great evening.